and I'm going to tell you about a fun fact about Brandon, and that is he has 40 animals at home. That's all you need to know. So if I'm a buyer and I'm shopping around for a rate, what does that actually mean?
If you're a buyer and you have a contract in your hand, so you have a definite close date in mind, you've already chosen your program type.
Why can't you just tell me what my interest rate would be today without being under contract on a home?
I can make a lot of assumptions.
Okay, such as?
Well, I can ask you what you think your credit score is and what kind of loan you think you want and how much you're going to put down. And I can tell you what today's rates are.
So when you say today's rates, like how often are interest rates actually changing?
At least once a day. They don't change very much, and I've always used this as a good kind of guideline. Say you drive by the gas station and gas is $4 a gallon, but you don't need gas, it doesn't matter. You're driving by tomorrow and gas is $3.50 and now you need a tank, then you fill up. So you can actually purchase the gas at that point. So it's kind of like that with a mortgage. Well, it doesn't matter what the sign says today because you can't actually buy gas, you can't actually obtain that mortgage today.
So when someone quotes an interest rate, what are they actually quoting then?
They're probably telling you what they think today's rate is based on what you tell them. If you haven't applied with somebody that's pulled your credit, reviewed your documentation, even sent your loan to underwriting, then it's really hard to give somebody a real interest rate. They can tell you what they think it is, but they could also tell you what you want to hear.
What do you want to hear?
Yeah.
Like, oh yeah, I'll beat anybody.
Yeah, it's 2% today.
Can I get a loan?
Yeah. How many you want?
At that rate. Brandon, question, problem actually. I'm not sure if you've noticed, but interest rates have not seemed to change a whole heck of a lot in the last, I'd say, year or two. However, we keep seeing on the news that the Federal Reserve, Mr. Jerome Powell, keeps lowering the federal base rate. So why is it that when that keeps dropping, mortgage rates aren't changing a whole lot?
It's taken me a little bit to think about this. They don't operate in lockstep. They don't always correlate, but they're similar, right? So what we track on the mortgage side is pretty much the 10-year Treasury note. Take the 10-year Treasury, add 2 to that, and that's probably about what mortgage rates are. So today was, in the low 4s for the
Treasury note.
For the Treasury note, yeah, probably right around 6 for an interest rate. But the Federal Reserve doesn't control mortgage rates. They control short-term interest rates like credit cards, student loans, car loans, that sort of thing, but not a 30-year mortgage, right? That's kind of traded like a stock. And like you said before, supply and demand. If there's more people buying or refinancing, then interest rates tend to come down.
So it's supply and demand both on the actual demand for mortgages, and is it the supply and demand on the back end like that bond market as well?
Oh yeah, absolutely. So
when you see the Federal Reserve dropping rates, it doesn't necessarily mean that mortgage rates are going to drop. There is sometimes a correlation though, yeah?
Yeah, and the bond market knows what's up. It's priced in already. Like we already think that the rates are going to come down on the Federal Reserve side again in the next time they meet, whenever that is. But the bond market knows that already. It's not a surprise. So the bond market's already priced that in. And then if they do something different, or Jerome Powell or whoever the Fed chair is talking says something that the bond market doesn't like, rates could go up. And we've seen that the last 2 times that rates have come down, then mortgage rates have actually gone up. Not a ton, because mortgage rates don't go from 6 to 7 in a day. They also don't go from 6 to 5.
Felt like they went from 3 to 7 pretty quickly.
Yeah, that was but yeah, even that was a while. It still took almost 2 years to get from lows to highs.
That's true, yeah.
Yeah, and coming back to my gas price analogy, then gas prices don't go from 4 to 5 overnight, usually, and they don't go from 4 to 3 overnight. So it's similar. When you're talking with a lender, you shouldn't, coming back to this, you should not be shopping interest rates. Most lenders, with the invention of the internet, have the same interest rate within a small differences, right? You should really look for somebody that is going to answer your phone call, answer your questions, meet with you, help you decide which loan program is best for you. Because not everybody has, $300,000 to put down an 800 credit score and a W-2 job, right? Some people have less money to put down. Maybe they're a first-time home buyer. Maybe they need a little bit more hand-holding. Maybe they need somebody that will answer their questions or meet with them on the weekends, or, I don't know, find somebody that you can
Do you know
trust.
any lenders that could do that? Okay. Next question.
Yeah. But find somebody that you can trust, and we'll show you some options, right? Not just give you one and say, here you go. Sometimes there is only one. But if there's multiple options, you should have somebody that will be able to explain things to you, show you why they think it's the best program for you. But ultimately, it's your mortgage. It's your bill. I got my own mortgage. Have your own.
Sometimes you'll recommend a particular loan program to a client rather than another, even though they're qualified for both. What are some reasons why one person might say need an FHA mortgage, even though they're qualified for conventional? Why might someone who's qualified for both an FHA loan and a conventional loan want to pick one over the other? Like, what are scenarios that you look at where you might make a suggestion of going one route versus another?
I always like to give somebody at least two options, but sometimes the property type will even dictate what you should do. Say you have a manufactured home that you're going to buy, and you have a little bit of money to put down.
And this is a manufactured home, like tied with land, like it's real property, right?
Right, real property, not in a park, not in a river, it's not a houseboat. But let's just say, your credit score is in the high sixes, low sevens, so your national average, and you have 5% to put down. An FHA loan is probably going to give you a lower interest rate and a lower payment and a lower down payment. And a conventional loan, which you can still get, might have a higher payment and a much higher interest rate because FHA is more forgiving when it comes to credit scores.
What are the things that people surprised to hear when they're getting their loan? Or what are things people don't know?
Sometimes people get surprised by the fact that when you do lock in your interest rate, most lenders will allow you to float down. That means get the better price if rates improve before closing.
So let's say I lock in this interest rate, I get it at whatever interest rate it is, and before closing, that rate is changed. Like if it goes up, does that mean I have to pay more? Is that locked in, stay there? Or if it goes down, like am I able to pay less? Like how does that work?
I can't speak for every lender out there, but I know the company that I work for, then let's just say you lock in your interest rate today and your closing's in 3 weeks.
Seems pretty quick, but yes.
And in the next 2 weeks, interest rates come down a little bit. If it's enough to make a difference, then I can always get you the better interest rate, or hopefully your lender can too. If it goes up, then you're protected. You're kind of hedging your bets when you lock in your interest rate.
Is there a benefit to not locking in a rate?
No, that's a really good question because I always say as soon as you can, you should lock in your interest rate because, again, if rates come down, you can always do better.
And you know what it is today, right? You might not know what it is tomorrow.
Right, yeah.
Okay.
It's like buy gas when you need it, not when it's...
You really like talking about gas.
Yeah.
Being a Tesla owner. What other things surprise people?
Here's the hardest part of any transaction, and it's not credit.
Dealing with the lender.
It's, yeah.
Okay, sorry. So that's the second hardest thing.
Getting a realtor to return your phone call. The hardest part of any transaction, I swear, and I tell the people this all the time, is documenting your down payment funds. And it's no big deal, right? We don't care where you're spending your money. We're not looking at that. We're not looking at where your dollars go every month. But we do have to verify that the money that you have for down payment is yours or a verified gift. A lot of times we're documenting the earnest money. Say you write a $5,000 check for earnest money. We have to verify that those funds came from your account. So if your friend gave you some money, that's okay. We just get a letter from your friend.
You need to make sure like I'm not getting a loan from a friend.
We have to make sure that you're not a money laundering drug lord terrorist.
Can I be like one of them, or does that have to be the whole combination?
You can't be any one of them.
Okay.
You can't be a money laundering person or a drug lord or a terrorist with questionable funds.
So let's say I want to get a loan. How do you know how much I can afford?
That's a great question because you should be having that conversation with your lender. And a lot of these things I'm saying, you should really be talking to your lender about this. You got to find somebody that not only knows how much you can afford on paper, but what your real life number is.
So what do you look at though that helps you understand, well, both those answers, what I can afford and then what I likely want to be spending? Like,
we're going to look at your pay stubs, your W-2s, and see what you're tracking for the last 2 years. Remember, we're making a loan for 30 years. So just because you worked an extra 10 hours of overtime last month, we're not going to just use that. We're going to use the last 2 years worth of overtime to help you qualify. If that's something that you want.
If it's available.
Yeah.
Right. Talking about expenses, let's say I'm buying a house in our area, which maybe a starter home's for $500,000, something like that. So that means I need to have $100,000 saved up for a down payment at like a minimum.
There's some great zero and low down programs.
Oh wait, so I don't actually need $100,000 to buy a house.
No, it'd be great if you did. Maybe you're a veteran and you don't need a down payment, or
So VA loans don't require any down payment.
right.
Okay. What's the lowest down payment that you can get with like a conventional or FHA loan?
If you're a first-time home buyer, there's still a zero down conventional through Washington State Housing. That's a great loan. Or if you have a little bit saved up, you can do 3% down. Or if you're in the right spot on the map, maybe a USDA loan might be a better fit for you, and that's zero down as well.
Do I have to like raise beef or something to get that loan?
No, for a USDA loan, it doesn't have to be farm or agricultural. It's just
It's the house.
a house in a location that's designated rural.
I've heard there's kind of state bond programs. There's some sort of down payment assistance programs for some people too. What does that entail?
So Washington State Housing has a great program where they'll loan you the down payment for 30 years at 0% interest and no payment. So let's just say you borrowed $20,000 for a down payment. At the end of the 30 years, you pay back $20,000. Or when you sell or refinance or whatever, when you move on from that loan or that property, you still only owe whatever you borrowed. There's no interest, there's no deferred interest, there's no payment. It's great. Just sits there until you're ready to pay it off.
And that's just to help people get into homes that don't have a down payment.
Yeah. So that's a good one. And you can use that with FHA or conventional. You can even use it with VA or USDA. It's not very common though.
Help with like closing costs.
Yeah. I really want to hit on like find somebody that you know, like, and trust. I want to hit that home because it may not be me. I'm not for everybody, but that's the biggest challenge with the I see is finding somebody that will really take care of you, show you some options.
I mean, I can speak from that from personal experience. Fortunately, not with me purchasing anything, but with a lot of clients where they might find somebody that's just online in another state, and sometimes they're great, but there's a lot of times where it can be really challenging to get information in time. You could have delays because of that. You could have costs that were not necessarily completely understood up front that come into play later. So I could definitely appreciate the need for one, talking to somebody up front before you're starting the home buying process, really getting comfortable with that person, making sure you like them. Like if you're meeting with a lender and you're unsure of them, well, find a different lender, like me with a few, talk to a few, see who you like.
If it's not me, find somebody else. It's fine.
Yeah, exactly. And then, you want to make sure you understand the numbers that they're going over with you. Like if say Brandon, for example, said, oh yeah, it's this, this, and this, and you don't understand one of those or why it's there, you need to ask those questions. You need to follow up and make sure you understand why that number's there, how it got there, how it applies to you, and maybe the long-term pros and cons or whatever with that.
Yeah, and somebody that will meet with you. It's nice if they're local and you can meet with them and they understand the nuances of doing business locally, because if you find somebody in Texas, they're going to want to tell you that there's other fees that aren't really there. Maybe they wouldn't know about how we do business here. There's lots of good lenders out there. Just find somebody that you like that will communicate and hopefully close on time.
Hopefully close on time. Oh yeah, thanks for being here, Brandon.
I'm happy to be here.
Oh, look at that.